how is this playing out in Saudi policy as well? One constant, despite all that Saudi, that Hadley has mentioned, has been Mr. Naimi has been in place for a very, very long time. People risk his ire whenever they ask him at an open meeting, are you going to be retiring anytime soon? Is this your last meeting as well? But he's been a constant as well, and yet the policy hasn't been constant. Of course, back in 2014, Saudi decided to change its role in global markets. Is it reasserting the original role?
Well, I think overall the situation, it's obviously driven by oil price and supply and demand. And I think this supply and demand is much tighter than it looks to be. And as a consequence, perhaps Saudi Arabia is better off just to wait a few more months. If you just look at figures, overall everybody talks about overproduction, but the big difference where we are today compared perhaps to a few years ago is that a lot of what we call spare capacity or excess potential production is being produced rather being kept as a cushion. And as demand grows, that extra production may just be eaten up in the next few months.
Is demand growing? I know there were some stats talking about the OECD, and they're very important stats as well, but there are question marks about emerging markets, and in particular China and their oil appetite.
I think overall, of course, we have seen the stock market in China being under pressure, but I don't think there is any sign from the oil underlying demand of China to really move or to the growth to change. What's perhaps important is the fact that what we have seen earlier this year has been a very mild winter, and of course that has an impact on the overall perception of demand.
Mark, do you want to come in here?
I was just going to say, I mean, if within essentially a few months you think the market's going to get a lot tighter, do you have any kind of, is it too crass to talk about a new oil price, an oil price trading range?
I think as far as we're concerned, the way we see things is the next few months, all eyes will be on the storage in the US. And because of the refining maintenance periods, that the level of inventory is unlikely to move much, or at least to go down over the next few weeks. But beyond that period, the more oil price goes down, the sharper the rebound. We have started seeing actually countries shutting down fields, and that's, I think, is not really in the analyst figures. So in terms of trading range, we would see the oil price perhaps around back 50 by the end of the year, but it could any sort of black swan event. Middle East is very unstable, for instance.
50 get anyone out of jail? I mean, obviously it's a lot better than 30, and it's a lot better than 35, but $50 per barrel is still significantly below any of the numbers we saw on the way down that said actually below $90 a barrel there are budgets in trouble, but below $80 a barrel, shale's in trouble, below $70 a barrel, etc., etc., etc. So I'm just wondering, does $50, which I think is a very real scenario, does that get anyone out of trouble?
No. At the end of the day, if one looks at the forward curve, most of so which should around $50 at the end of 2020, most projects, new projects, are still uneconomic, and that doesn't or hardly trigger the return of the debt, which is so important for the new project.